Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Hyde, Taylor Riggs, counting you down to that closing bell. And here to help take us beyond the bell, our global simulcast team, Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide, parsing the crucial moments of the trading day. Carol, another day where the market seems to be treading water.
Yeah, absolutely. Although we did take a leg down, I feel like in this last hour, if you look at the indices, we're going to finish on those major equity averages pretty much at our lows of the day. It does feel like everybody's kind of crawling towards tomorrow's CPI report. It's a reading for the month of May, but we could get a pretty sharp print, and we'll see whether or not investors are ready for it, Tim.
Yeah, the question is what happens to the equity market, but more so what happens to the bond market if we get a print that is relatively high. But if you look at bonds right now and what happened today, the 10-year yield falling below 1.5% for the first time in a month, investors essentially saying, hey, wait a second, we're starting to buy this transitory story from the Federal Reserve.
What inflation?
Yeah, exactly.
And that was huge, I think, particular coming into a more than $30 billion 10-year auction today at 1 p.m., Caroline, when you had yields come down yesterday and then a sense of this auction of, will it go well? Is there a demand at 150? Yeah, to say the least, there was demand, one of the strongest demands that we've seen in quite some time.
And we've got a 30-year auction again tomorrow, so still plenty of supply coming, but those yields still tracking lower, Romaine.
Yeah, amazing that the appetite continues here despite the drop in yields. I guess this is going to have some big implications, particularly if the data, as is it expected, materializes tomorrow in a way, looking at 4.7 on a year-over-year basis on that CPI number, obviously month to month, a little bit lighter, but nevertheless, something that could be a concern here for the markets. As we get the closing bells here on the day, you're looking at 42.19. This is around the lows of the day right now here for the S&P 500. It looks like it's going to finish down about 0.2%. The NASDAQ composite down 0.1%. We should point out the NASDAQ 100 is actually higher in the green by less than 0.1%. Dow Jones Industrial Average lower by about 151 points, down 0.4%. And the Russell 2000 down 0.7% here on the day at the close. Carol.
Yeah, and we saw a fair amount of groups, though, kind of for most of the day in terms of those major industry groups actually trading higher. So we saw kind of an even split in the S&P 500 for much of the day. So there were a fair amount of stocks that actually posted some decent gains, Taylor.
And you certainly see that on a sector level, Carol. For our radio audience, we're taking a look at the gainers, but there are three red sectors, of course, even in the gainers section. And this really is defensive, Carol, with utilities, telecom, technology, real estate, some of those bond proxies, defensive sectors that are up anywhere from 0.3 to almost 1 or 2%. We migrate downwards to the bottom, and well, with yields falling, so too are banks and some of the transportation companies. We're having a great conversation about FedEx and UPS really needing to start heavily investing at this time.
All right, got to talk about, I can't believe we have not said meme stocks, and we've been a few minutes in here, guys. It's like the meme stocks yesterday are so yesterday. Forget Wendy's, forget Clover Health, because I've got a new batch for you. One of them is GEO Group. This is a REIT. It's a specialty REIT. It has prisons mostly in the United States. It is up almost 38% in today's session, up 8 out of the 9 past trading days, gain of about 82%. So unbelievable. A little perspective, it's still down about 70% from its all-time high back in 2017. Clean Energy Fuels, another meme stock, up about 31%, up 46% at its high today. It's up 6 out of the past 7 trading sessions. It's an operator and builder of natural gas filling stations for vehicle fleets. And then let's get a little bit to more normal stories. Fox, I'm looking at Class A shares. They were among your top gainers in the S&P and the NASDAQ 100. Fox upgraded at Wells Fargo on expected sports betting pivot. They like that. So an upgrade to overweight, upping the price target to 47 a share from 42. Twitter also getting an upgrade in today's session. Very positive from Mixed Positive by Vertical Group. They like the flow of new brand campaign promotions and product releases. Twitter up 1.5% today, and Fox shares, Tim, up almost 3%.
Okay, you might have forgotten about Clover Health, but I certainly didn't. It was among the big notable decliners today. Down by more than 23%, but higher by more than 85% yesterday, more than 32% on Monday. AMC down more than 10% today. Dish got downgraded to underweight from neutral. Carolina, JP Morgan down more than 7%, and then UPS down nearly 4%, shares dropping the most in 7 months after the company's profit margin outlook. Caroline disappointed investors.
Let's go cross-asset. As you look at the downside of the equity market, I look at what's down from basically most of the major currency pairs versus the US dollar. Now, I'm looking at the global macro movers for our radio audience, for those on YouTube and TV too. I'm looking at the yen off by 0.1%, The British pound off by 0.3%, but the US dollar was off by about 0.3%, and it moved higher throughout the course of the day, basically ending the day flat. US dollar sort of trying to digest where we look ahead to the CPI data coming out tomorrow. We're basically treading water in the FX markets as we look ahead to that all-important reading coming out tomorrow. Also treading water to a certain extent was the commodities sector. I'm looking at oil, WTI crude off by 0.5%, $69.72, so close to that $70 level. It's still elevated. We actually saw some supplies, some inventories pick up in the United States, just pushing down a little bit, even though we are in the midst of getting in our cars and driving season here in the United States. Steel up a percentage point, some big news on coal in terms of China trying to push back against some of the rallies that we've seen in certain commodities. But I take it to Taylor's favorite. We end on what's happening in terms of bonds, sovereign bonds. In Europe, it was a story of yields going lower. Remember, we've got the ECB tomorrow as well, Taylor.
And that story continues in the U.S. It is rate of change on the way down. We're down 4 basis points yesterday on the 10-year, an additional 5 basis points today as we now hover at a 1.4874, a 10-year auction that was really, really well received. We're really catching a bid all across the board as you guys, inflation sort of seemed to take a back seat. And I think, Carol, there's a few things that really stick out to me. I mean, one, just a technical level. I was reading a note from B of A strategist saying that a lot of corporations, corporate pension funds, institutional investors could be taking out some of the gains in equities and pivoting. They are coming for your bonds. Dan Suzuki echoed that comment about some of the technical factors. And then just from a macroeconomic, perhaps maybe the Fed was right. A lot of these inflationary fears were indeed transitory.
Well, think about what our Bloomberg intelligence team has been saying. They think it's going to take several reports, maybe until 2022, until we kind of get through the pandemic effect on all of our economic data points, including inflation. And so we need to remember the April increase in CPI was the biggest since 2009. Get ready for maybe a sharp print tomorrow, and whether or not investors are ready to say, wait a minute, let's remember we're still dealing with pandemic impacted data, guys.
Yeah, but you have to look at the trend line too. And I mean, the trend line has been relatively consistent here. And yes, obviously these month to month and year over year changes are going to look absolutely crazy because of the base effects here. But we've heard from a lot of economists, including Claudia Sahm earlier this morning on Bloomberg Surveillance, who talked about this idea of that trend line. And as long as you keep an eye on that, Taylor, I think in general, the market can maybe find a little bit of comfort in that.
We are getting some very interesting news from GameStop. Of course, we had the annual shareholders meeting. We're waiting earnings after the bell. But they are now coming out and naming a new CEO, Matt Furlong. Caroline is going to dig into the numbers to figure out some more, I think, information. But we're going through the press release. They have Matt Furlong as Chief Executive Officer and Mike Recupero as Chief Financial Officer, both joining from Amazon, where they held senior roles and oversaw various growth initiatives. We indeed did hear from the company saying, buckle up, we have huge strategic announcements to announce. They were not yet ready to do that, but wow, stealing from Amazon certainly shows that this company trying to do what no other retailer has done.
Yeah, look, shares higher in after-hours trading by a little more than 2% as investors digest this news, Caroline. I think the big question that investors have, and these are the believers in GameStop, is how does it pivot to a company that is more like Amazon and less like a traditional physical retailer, less like the GameStop that so many of these retail investors actually went to when they were younger, the brick-and-mortar stores. How does it do that transition that Ryan Cohen, formerly of Chewy, is going to help facilitate?
And Ryan Cohen has been doing it by hiring from Amazon, like the CTO. They've been putting in chief business officers in place, and now to have a new CEO who's a veteran of e-commerce, really overall, Mr. Furlong. I mean, he also comes from P&G as well, so he understands brands, he understands basically consumer goods as well. This is all about trying to get that into the e-commerce spectrum and not share some of the tactics, though, either.
And the idea, though, here, Caroline, that Ryan is actually able to actually recruit these types of people away from what are clearly large established companies to a company that I guess, to put it mildly, maybe has a somewhat uncertain future. And maybe that says a lot about maybe what the potential is there for GameStop, and maybe it says a lot about Ryan Cohen himself.
Well, Ryan Cohen, who was also named chairman of the company today, you know, what's interesting is he's come out and said, folks, you're going to have to be patient. We're not going to fix this company overnight. And it doesn't know what it really wants to be. Does it become an experience where people go to the stores? Does it become a company that works with game publishers? What do they need to do to kind of reinvent themselves so that there's longer term duration, you guys, for this company?
You're getting some financial background as well, Caroline, for the chief financial officer coming from Amazon, where he's the chief financial officer of Prime Video. He's overseeing the consumer business as well. So as you think about a company trying to reinvent itself from a financial perspective, investing in growth. You're getting some pretty big chops here as we continue to await earnings that might be overshadowed by some of this news.
Yeah, I guess like the big question is if earnings for GameStop even matter. Many analysts would argue that this is a company whose stock price is completely disconnected from the fundamentals. So it doesn't matter necessarily what numbers the company ends up printing for the most recent quarter because those investors are not necessarily trading on that.
You mean being up 1,500% is a disconnect from
I'm just saying that
fundamentals?
some analysts might argue that, Carol.
All right, so we'll wait for those numbers. All right, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same place, same time tomorrow.